In this presentation, we're going to take a look at reports, the major financial statement reports, including the balance sheet and income statement, and some of the other supplemental reports that are typically giving more information about the major financial statement reports. Let's zoom into it with Xero. Here we are in our Xero Demo Company dashboard. If we want to take a look at the reports now, when we're thinking about the reports and we've opened some of the major reports already, you want to think about the major reports as the financial statements, basically the financial statement reports, which include the balance sheet and the income statement. Pretty much all other reports are going to be some kind of supplemental report, which is going to give some explanation or expansion on the major financial statement reports. Now, I like how Xero has put those, has represented that by having the reports up top, but having the balance sheet and income statement down below. These are our favorite reports, and we'll see how to do that shortly with this basically star feature. They put them right down here and say, hey, you know, these are the ones that are going to be the favorite reports, or you could put them in the favorite reports here. And that's nice because these are the ones you're typically going to be using all the time. So I'm actually going to open these as we go. And I want to think about, as we open these, all other reports that we think about, how do they relate to the balance sheet and the income statement? Because pretty much all of them are going to relate somehow to giving more detail about the balance sheet and income statement. So let's open up the balance sheet as we have seen in the past. It's going to open up on top. When it does so, we're going to duplicate the tab by going to the tab up top, right-clicking on the tab up top, and then duplicating that tab. Then let's go back to the tab to the left. Let's do the same thing for the income statement. So we're going to select the accounting drop-down. We're going to go down to the income statement. It's going to open up, and when it does, we're going to copy it. So I'm going to go back up top, and I'm going to right-click on that tab up top. We're going to be duplicating the income statement. Now we've got the balance sheet. We've got the income statement. Going back to the tab to the left, and we're going to look at the other reports and just think about how they would all tie in essence, to the balance sheet and income statement. So this is why I would typically have these two reports open pretty much all the time with whatever I'm doing, even if I'm looking at other kind of reports over here, because I'm really considering other reports as they relate to the major reports, balance sheet and income statement. And when doing any financial transactions, I'm entering those financial transactions and thinking what's going to happen when I do so to the major financial statement reports, those being income statement, balance sheet. All right, so we're back to the left. We're then going to go to the other reports that we haven't seen so much of. We're going to go down to the accounting and down to the reports. Then we note the major grouping of the reports. We've got the financial reports, we've got the sales reports, we have the purchases reports, the tax reports, the accounting reports, inventory, pay run, and the fixed assets type reports. So if we go back up top, the financial statement reports are going to include, some of those major reports. That's, of course, going to be the balance sheet report and the income statement report. And note that as you check on this little star item there, that's what's putting them into the major categories. So if I was to check that one off, we have the cash summary here. So that's what's putting it into this major reports section, so you can get to them a little bit more easily. And again, the ones you're going to have in that section, of course, will be the balance sheet and the income statement. Then we have the cash summary report. Notice the cash summary report is kind of a supplemental report to a balance sheet account, right? It's a supplemental report to the cash account here, which we should probably look at since our cash was overdrawn for a while, but it's going to be a supplemental to the checking account. Now it's back up top because we're in 2019, so it's not overdrawn as of yet. I messed it up in 2020. Back to our reports. Then we got the statement of cash flows. That's going to be the other major financial statement report. It's less of a report that you're going to go back and forth to all the time, but it's going to be another financial statement reports that's going to be transferring from an accrual basis to a cash basis system, and therefore, of course, in the financial section. The statement of owner's equity, again, another kind of financial statement type of report. This one also kind of gives more detail, in essence, to the balance sheet type of information, which is going to be in the equity section. We then have the More button down here. So if we select the More button, we've got the balance sheet, the budget summary. So if we have the budget information in place, budget versus actual, the budget variance, budget, the actual versus the budget, executive summary, income statement, movements in equity, and so that's going to be supporting the equity section, and then tracking summary. So I'm going to put that back up. Then we have the sales side of things. So when we think about the sales side of things, of course, we're thinking about reports that are going to be supporting then the cycle for sales. So that's going to be including the income statement as well as the kind of the cycle here. So that includes possibly accounts receivable as well, balance sheet report or account, and then the income statement account. Those are the things that are affected in the sales cycle. So notice on the sales side, we've got the receivable detail. Now, again, sales you might think of as an income statement account, because that's, if you go to the income statement, our major revenue account is often called sales here. But it's also, sales is intimately related to the accounts receivable, typically, if we're going to be creating invoices. So we have the age receivable detail, which is supporting the accounts receivable account. And we don't have one here. I'm going to go to 2020, just so we have an AR account. Let's go to like June and update that one. So here's the accounts receivable. Here's the people that owe us money. And so these receivable reports then are going to be supplemental to that. Then we have the customer invoice report. So invoicing is going to be a process that affects both accounts receivable and the revenue or the income. Aged receivables, that's going to be supporting the accounts receivable. So major reports if we're dealing with the AR, and many people work just in the AR department. If a larger companies are there, they may have people just constantly working in accounts receivable, sorting the accounts receivable, trying to collect on the accounts receivable, billing on the accounts receivable. So then we have the income by contact. Now we're supporting the income statement report. We're taking a look at the income, and we're kind of getting the income typically by customer. Contacts being vendors typically, and customers. So, and if it's money coming in, you would think that would be the customers. And then we have the receivable invoice detail. So now we've got the receivables and the invoice detail, receivables being typically accounts receivable, a balance sheet account, receivable invoice summary. So you can see how those kind of support the major financial statements. Then we have the purchases side of things. So now we're in the liability. You're thinking liability side of things. You're thinking the balance sheet account of accounts payable, who we owe money to, and possibly the other side, purchases, possibly inventory that we would be purchasing, or other types of expenses, possibly normal kind of expenses items as well. So we have the age payable detail. That's going to be supporting the balance sheet account of the liability of accounts payable. Age payable summary. We have the billable expenses. And then we have the supplier invoice report, aged payables, again, supporting the liability account. And then expense claim detail, expense by contact. So again, we're listing the expenses this time by contact, which you would think instead of on the sales side by customer, now by vendor. All the expenses that we have, we want to break them out. In other words, not by account down here, but by who we paid them to, by, you would think, the vendors that we're paying them out to. That's going to be the type of contact. Then we got the payable invoice detail and the payable invoice summary. I'm going to bring that back up, or shorten that one back up. Then we got the inventory reporting, which of course you only have to deal with if you have the inventory in process. Inventory, the things involved in inventory, obviously the balance sheet account, inventory, asset, have on hand. The related item to inventory might be a payable, because when we buy the inventory, we might purchase it on account. So the liability of accounts payable. Cost of goods sold, when we sell the inventory, it's going to go to cost of goods sold, basically an expense account. So we have the inventory summary. That's going to give us a report kind of supporting the inventory that's on hand. Notice when we go to the balance sheet, the inventory on hand is going to be on just a dollar amount. If I go to the detail of it, it's going to tell us when those dollar amounts happen, the activity by date. But what I want to see is the activity by the type of inventory. So if I go into here, we can generate reports by inventory type of inventory. And then we have the sale by item. So we can look at the sales number. That's going to be basically an income account now, right? But now we want to look at the sales and break it out by the items that we sold, by the inventory items. So in other words, if I look at the income statement, I'm looking at the sales item up top, but I want to know not how much we sold, not the date we sold, not who we sold it to, but I want to know what we sold. What were the services or the inventory items that we sold? Break that sales number out by what the thing is that we sold. So we have then inventory item detail. So the detail of the inventory item lists. So what kind of inventory do we have? Just give me a list of it. Then we have the inventory item summary. Then we can go to the accounting information. So we got the accounting transactions. So this is going to give the kind of transaction detail, bank reconciliation summary. So when we compare the bank statement to the books, that's going to be supporting basically the cash account. This first one's kind of more of a general item because the account transactions is going to give us the detail of the transactions. And then we have the blank report, the contact transaction summary, the foreign currency gains and losses. So if we have foreign currency gains and losses, we have the general ledger, and that's going to give us basically that detailed report, kind of like the transaction detail that we see when we drill down on each of the accounts. So if you think about the general ledger, that would be kind of like the transaction detail reports for all the accounts, all balance sheet and income statement accounts. And then we have the journal report. So if we make journal entries like adjusting entries, which we'll do at the end of our problem, and we actually do that with journal entries, then we might be able to make a journal report and report the journal transactions, debit, credit type transactions, other than the use of forms. And then we have the trial balance. Note the trial balance down here, they kind of put it in accounting as if it's just an accounting thing. But the trial balance is really useful because that kind of combines the income statement and the balance sheet into one report without the subtotals. So as we get used to this, I'll probably start to gravitate towards a trial balance from time to time because it's a faster way for us to do the data input, which we'll do on this tab, then jump to another tab to just see what happened by account. Because I can go through the entire trial balance, which includes the income statement and balance sheet without the subtotals, much more easily than I can jumping back and forth between the balance sheet and income statement, depending on what we're looking into. And then we have the pay run by employee, pay run by pay item, pay run by pay type, and then the fixed asset reports down here, and that's going to include those property, plants, and equipment, those long-lived type of assets, those things that we couldn't just expense when we purchased them, but had to put them on the books as an asset, having to deviate from a cash basis because we have to. Even if you're on a cash basis, if you buy something like a $100,000 piece of equipment and paid cash for it, you still, if you expense that in the time period that you purchased it, it would be a big distortion of the books when you compare one period to another. Therefore, big purchases, even if you're on a cash basis, typically have to be put on the books for a fixed asset, and then we have to depreciate them. So that's going to be a whole nother kind of thing. We could have depreciation schedules, fixed asset reconciliations, depreciation schedules, and disposal schedules could be all supporting, again, balance sheet accounts, which would be the balance sheet account of fixed assets and the accumulated depreciation, as well as the income statement account of the depreciation expense. So in future presentations, we'll kind of dig into some of the more most important of these type of reports.